Trading Nut, episode 151.
Everything has a cost, and it comes back to the biggest cost is time. You know, you'll see traders throw years and years and years at this, and they'll make a couple of $1,000s. It's like your average, hourly rate is like $2 an hour. It's like, go and play golf, mate. Go do something else. Like your time is one thing you can't get back.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Steve Ruffley on the show for you. So this is a real treat. This guy has been through the entire industry, the trading industry, from like fund manager to helping mentor individual retail traders to retail trading himself. So guys, this is a real treat. Steve is actually been out of the limelight for a while now, so having him on the show is fantastic. And on top of that, he's giving you guys a chance to ask him questions, and we're going to release those in the future as well. So guys, after the show, if you've got some questions you want Steve to answer that are either personal to you or just a generic question that I don't ask in the show, then please drop it in one of the comments, send me an email, whatever it is. I'll make sure that we get a list of those questions that we can get Steve to answer, and I'll be dropping those on the channel in the future, so stay tuned for that as well. Now, the other things you're going to find out on the show are like, how does Steve get 1,000 lot positions into the market? How does he manage those trades, get in and get out, along with a whole bunch more. So guys, that's coming up in the show. Can't wait for you to listen to it. Now, before we get into it, just a couple of things quickly. One is Genius Trader is coming out soon. I want to get it out before the end of the year. Stay tuned for that. I should be recording a release episode on that coming soon. So this is going to help you trading in 2022. So guys, please stay tuned for the Genius Trader. Now, last but not least, before we get into the episode, the December bot is about to hit the Robot Lab, part of my Robot Builders Club. This is based on Heikin-Ashi candles. I'm going to do a video. I will release that video on the channel so you can find out how it works. But it's all based around the Heikin-Ashi candles. So if you're wondering how to potentially trade that, what may work in the future, then check that out. I'll be running some performance stats on that. We'll be putting on a demo account and seeing how it goes across the month of December 2021. All right, guys. So that's all coming up here on Trading Up. But for now, let's get on with the episode. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. All right, folks, here we are on Trading Up. We've got Steve Ruffley here on the show, funnily enough, in New Zealand as well as me. So this is a rare occasion for me having someone who actually is based in New Zealand on the show. So welcome to the show, Steve.
Thank you, Cam. Thanks for having me.
Well, look, guys, if you don't know who Steve is, I probably would have given a bit of an introduction already, but this guy is not just an author of The Rough Guide to Trading, a presenter on FX Street. He's also, you've done a regulated fund manager. You've been a professional trader for 20 years. I mean, you are the real deal in terms of like traders out there who are willing to speak to the public. So it's a pleasure to have you on, and today we're going to find out about your journey and then try and get as much information out of you as possible to help everyone listening to the show or watching the show. So to start off with, Steve, how did you get into trading and where did it all start?
Well, as always, there's a funny story behind that. At the time, I was living in Gibraltar, and I was out for an afternoon out down Portobello's. There was a nice set of Ferraris and Lamborghinis and stuff knocking around, and just happened to bump into the guys that own them. And I was like, what do you guys do? And they said, we're all traders. I'm like, that sounds good to me. I'll definitely want one of those cars. And we had a few beers, bit of a chat, and the rest is history. It turned out that that was Man Financial Trading, and they had an office in Gibraltar. They were taking traders on, so I did the whole kind of apprentice type thing. I went on this course, flew down to London, did the course in the London office down there. It was about 8 weeks, so me and 10 guys that were kind of all in this big flat in Earl's Court. So it was a great old time, and I passed it, and got the money, got the backing, and that's how I became a trader.
And so what was the name of their outfit again?
Man Financial. They've changed to Marix now.
Right. Okay. And so how did that journey sort of go in terms of was it everyone that came on board there and went through the training became a trader, or were you a little bit different, or was it something you did that might have got you from A to B better than the average man on the street?
Yeah, I mean, it was a pretty wild time because they kind of done this course all over the place. So you got people from all over the world, all in London, from different backgrounds, and again, it's like a lot of things they taught us were nonsense, really. We were learning about the Russell Index and lots of fundamentals, not so many technicals. And I mean, it was just kind of basically to weed the people out. It's pretty intense. You had to be reasonably intelligent, but I kind of passed that and I did it. And the thing for me is I just wanted it. I just wanted it. I kind of before I ever was a trader, I worked for PricewaterhouseCoopers, and I was involved in placing the investments for wealthy clients. So I'd already had a bit of a taste to the money and the big kind of sums. And then when I kind of got this opportunity to go trading, I was like, whatever it takes. I'm in. Whip me as hard as you want, and I'll just keep going. So, I learned a lot of stuff that was really irrelevant, and that's really when later in life I offered, my kind of mentoring and, my kind of software products, things that help traders make money rather than just kind of trying to, fill your head full of, useless kind of science and facts. The markets are constantly moving, and your job is not really to be the smartest guy out there. Perhaps the opposite. You've got to control your emotions. So that's the main problem I had with a trader. I'd never had a problem making money from day one. It was keeping hold of it. that was my problem. They never taught me that. I had to learn that myself.
And so I mean, can you give us some insight? And I know it's 20 years ago, in terms of what sort of stuff they were teaching you that was useful, because you talked about the Russell not being that, too much information.
I mean, the thing is, it was a lot of, how the kind of markets worked. They were looking at it, much more institutionally, which, don't get me wrong, is important. They're the guys with the money who move the markets. But, we were trading, scalping and, trading on TT, just ladders like moving up and down. So they weren't really kind of teaching you how to marry that up with some charts, how to kind of, really, use technical analysis, which, a lot of the courses you can pay for do that. And it was kind of, it was run by an Indian guy called Pranel, and he thought a lot of himself, but he was another failed trader. Them that can do, those that can't teach. So, he was running these courses, and he was just out for a good time. And, as I say, it's kind of, it was a long time ago. And for probably the last 5 years, what I've been focusing on is forgetting a lot of things I learned and a lot of things I understand about economics, because they ain't working anymore. I mean, you look at, we're in a world of, real inflation's back. We've pumped so much money into the economy and printed so much money. The rules have changed. There's no bad news for stocks, it seems, although we've sold off the last couple of days, but, we're still, hitting record highs regularly. And, we're going to see real tests in the currency, to who can shift on the interest rates and what impacts that are going to have, globally. So, as I say, it's kind of, I think everyone kind of searches for this holy grail of trading, that there's something that just makes you a successful trader. And it's not, it's a journey. You have to sometimes know a little bit and not get too carried away with knowing everything, because you almost get like snow blindness. You can't do anything because you think, you don't know enough. Some of the best traders I've mentored are pretty straightforward people that, can control their emotions and just do, something that works repetitively over and over again. And I guess that's where my mentoring and just talking to traders, really helps, because it's somebody, who's made every mistake in the book. It's cost me, getting rich quick. It took me a long time to get rich, so it wasn't quick. And, certainly I've burnt a few accounts, and, I've lost plenty of money, but, at the end of the day, 20 years later, now I'm up and I'm winning. So, it's a journey. That's what I'd say, the most important thing people need to learn about trading. It's a journey. It's a process.
Hey folks, just jumping in here now. This show is sponsored by Mudrix. Mudrix offers you 3 smart ways to make money from crypto. The first is CoinSets. baskets of coins you can invest in based around themes and picked by experts. The second is algos. Choose from hundreds of robots that can trade crypto for you on autopilot. And the third is to create your own algos and tap into over 50,000 Mudrex investors. Click my special referral link in the description below or the card above and get $25 credit when you join Mudrex today. And in terms of like no holy grail and the fact that these guys, just trading off, controlling their emotions is a way to do it. I mean, how simple can you get in terms of being successful, or how simple do you think you can get in terms of your approach to it and being successful? I mean, because I know a lot of people can easily overcomplicate this.
Mm-hmm. I mean, it's really knowing what's moving, and not necessarily why, but trading something that's moving. So there's a couple of things that I kind of teach people to do, and it's you look for the market to consolidate and not gone anywhere for a certain period of time, and then it's going to move. It has to move, because if it doesn't move, people don't make money. So it's either going to break out. So you're either a breakout trader, where it's going to go from a point to higher or lower, and you get on that move. Now you're going to make more money from that move, because when you look to the right of the chart, that's all blank, that's all unknown. The more you see on the charts, the more information you have, the less likely you are to make money out of it. So if you see a 100 pip 15-minute candle and you can't quite understand why that happened, yeah, you can sell it for maybe 10, 15 pips. But that's all you're going to get, because the market's showing you. So, simple strategies like that, for instance, a big overextended move will generally retrace, to some parts of the Fibonacci. I mean, my combination of identifying either a breakout or an overextended candle, which I call them, using Fibonacci when I've picked the right top or bottom, I can usually get back to that 50%, 80% of the time. So that's good enough for me. That's good enough for any trader. It doesn't necessarily mean you're going to make money 80% of the time. What I've found is that I can make some money and take calculated risk within that, scenario of trades, and net, over a period of time, I always win. I mean, not I sometimes win. I always win overall.
And so, like you talked about, going from scalping the TT to, with no technical analysis at this firm initially. I mean, you obviously moved into technical analysis with what you're saying now. I mean, how did you make that shift? Was that something that you did yourself, or was that something that you had a mentor or some other training for?
Yeah, no mentor, really. I mean, trading, they're all a bunch of old women, really. They all want to kind of, know the latest thing and the gossip. And you got to remember, back in the day, we didn't have what we have now. I mean, I use MT4 and, people slate it, but I love it. It's easy to kind of, configure how you want. It's easy to kind of, get all your EAs done and, make the screens look exactly how you want. We were using CQG back in the day, and that was a good charting package. But, no training. We were basically, learning what candlesticks were for ourselves, the basics. I mean, even back in the day, I was using market profile because that's what the old school traders were using. Using market profile these days. But, I mean, that was the kind of thing that we all learned from each other, really. And it wasn't until, I would say, a good year into trading that I kind of switched my brain over to the kind of, being a bit more technical and being a little less, just trading, basic movement. But I mean, we just encouraged to trade ridiculously big size all the time. To be honest, it wasn't like it was a scam, but at the end of the day, you didn't get paid to be a trader. And, your desk fees when you're a professional trader are about £3,500 a month. So you've got to pay for everything. So they back you with the money and they take 50% of what you make. But then, when you start adding that up, you've got to make £10,000, £15,000 a month just to cover costs and to stay in the game. So this is the difference, you see. Like when I'm teaching traders right now, or I'm looking to myself and think, well, all I'm doing is paying a spread. I'm like, happy days. On my internet's like $80 a month. That's it. I'm good. I'm fine. I'm set. I can still make the same, if not more money than I used to. Basically just trading like every normal retail trader does. I don't even do, I have a Prime account and that kind of stuff. But really, I just trade like everybody else because, from a cost benefit, it's just that's it. This is the other thing. People don't want to associate the cost, but there are costs with everything you do, any kind of business, and paying the spread. That's just part of your cost. You don't have all those fixed costs and you don't have all those other things, kind of dragging you down because, everything. You can have 5 screens, 6 screens, £1,000 a month. You can have Bloomberg, £800 a month, TT, £500 a month. Anything else you want? Yeah, like these feeds. And it's like the edge you get from those things. You have to be trading massive size or being ultra aggressive or you're not going to make that money back. So, I mean, that was the days when I was up at 6 o'clock in the office for 6:45, didn't leave till 7. I haven't done one of those days for 18 years. So I did my time, and that's not living to me. I probably trade, I don't know, 5 hours a week.
It's interesting, like, I mean, you mentioned cost there, because nobody really talks about cost of trade on the show that I've had. Nobody's talked about the cost of trading. Mm-hmm. And, I mean, when you're sort of trading or thinking about coming up with when you thought about coming up with a strategy and stuff, were you factoring in the cost of trading for that, the number of trades you're placing and I suppose if you're scalping a few pips, how that affects the amount you're actually paying the broker and that sort of thing? Do you factor it in and tell your clients that come through and want to get mentored how to factor in the cost of trading?
Well, I'll tell you what, it's a really interesting point, actually, because, again, it was all a learning journey of seeing how other traders, did it. And when you're in a professional environment, we have people doing, team trading oil. People were trading, very complex condors and, different kind of spreading strategies that required a lot of size. People were just out and out scalpers. So there's a lot of things to kind of take on. If you wanted to make the big money, you had to have the big money. So all the kind of, spread traders, they were doing multiple spreads, had huge accounts and they'd taken years to get there. If you wanted to make the kind of quick money like I did, you're a scalper in the DAX trading big size. It's like a lunatic's market. And that kind of suits my personality, what we did at the time. And that's what I did. So, I mean, a lot of the things I did from the costing part of it, I learned what other people did. Listen, there's guys out there that, have rebate schemes from their broker, and they can be a break-even trader, make no money, but still get paid a decent living by getting rebates. There's a lot of different ways to make money from trading, and it isn't just necessarily being sat there all day pressing the button. It's a business like anything else. So I factor in, I have rebate deals that, if I, kind of trade X amount of size, I will get money back from the broker. But I'm big. This is it. With your money comes power, and it always has done. So I, with Black Bull over here, because mainly they're in New Zealand, they're 2 hours away. I was a chief market strategist of Intertrader for a decade in London. But then I was living all over the place, and that was handy. But I had my own deals. So when I was running my funds or doing my own trading, I always expected, a cut of their profit, because I can take my money anywhere, and they knew that. So that's how that works. So yeah, I mean, it's there are lots of different ways, and that's what I say to most people when they're a trader. It's like, what's your goals first of all? What do you want to make? Because they always just tell me they want to be rich, and it's like it gets hard to kind of just go, oh, you want to be rich? Do you a green Lamborghini? Yeah, all right, mate. Okay, now a little bit before we get to the green Lamborghini, mate, what do you want to do? What do you really want to achieve? And people, really struggle answering that sometimes. It's all about having achievable goals, and what might be a lot of money to some people is not a lot of money to others. And it's having that honest conversation with people. And yeah, again, one of these other things, as I keep saying, going back to your original question is, what do you want to do? Do you want to be sat generating a lot of, business for a broker? If you do, then you might get some money back. If you want to be a short-term trader in and out, then there's different things to look at. But everything has a cost, and it comes back to the biggest cost is time. You'll see traders throw years and years and years at this, and they'll make a couple of $1,000s. It's like your average, hourly rate is like $2 an hour. It's like, go and play golf, mate. Go do something else. Like your time is one thing you can't get back. And, this is one thing I do say that's a little bit arrogant, but, I'm not a billionaire in monetary terms, but I'm a time billionaire. I really, for a long, long time have not worked a full, honest day's work, 9 to 5 in, the best part of 20 years. And that's because I learned not how to trade and make money from trading. I learned how the business of making money in trading works. And that's probably the biggest tip that people really should take, because I started being backed by, a big company. And then I just found someone rich. There's loads of rich traders around. Hey, you back me. And then the more money you have, the more money you make. And then you buy yourself out of your deal. Then you got your own money. So instead of spending, 3 or 4 years getting where you need to be, it's the power of networking. That's it. Find somebody who's got more than you, piggyback on their shoulders, learn a bit what they're doing, and then go out on your own. And that's what I did.
It's interesting. So we talked about cost, and now we're talking about time, which, I mean, the irony is, right, so these things almost are all about not making money, right? So the cost you're spending, and then the time is obviously what you're giving. I mean, how critical is it, or what advice would you give to a trader who's starting out now and, like, to try and get to a point where they're like, the time is being optimized and they're not like wasting time? and therefore driving down the cost of their hourly rate, for example?
I mean, you have to be prepared, and, you have to have a plan, and you have to understand what you're doing. A lot of traders flip between, is this the latest strategy, or should I be listening to this expert? What you need to be able to do is make your time count, and that means making every pip count. So if you're not trading, decent size, then you're going to have to, use more of that time. So many times, people are looking, to get the low of the market and sell the high, but you might be doing that at, 1 point a pip. So you've got to wait all day to hit the highs. I'm trading, upwards of 1,000 lots in a trade. That moves quick. So, what did I do? I made 7,000 or 8,000 last night, 14 minutes. That's it. In, out, done. Well, that's because I'm trading, in the DAX. I was trading some, short pound, which, is again counted to what I think, but it looked weak, so I sold it. And, you make your money. It's, I don't hesitate. The thing is, if you're pressing that button, you should never be fearful. I'll press that button until I get a margin call. I think the trade's good. I'll keep going. I mean, I don't really, because I've got two bigger accounts to hit a margin call. But I've been doing that trade once. I'm in it 100%. And that's the way you've got to be. You believe in your trade, you believe in what you're doing, and it's like, I want to get as much money into that market as quick as I can, and then get it out, because time is your enemy. Yeah, there's a big thing that when you're a trader that the people forget, is that the market will offer you a chance to get out. And it will give you a chance, usually, if you're right on the trade, to make some money. And there'll be an amount of money that you make, and it'll offer you that first time. You think, should I take that? That's good. And by the time you thought about it, bang, you're down to zero or offside. And then you've got to wait again for that trade to build back up. And it might go to make some more money, but then you've wasted that time again. You wasted that effort. I always take money off the table. You will never see me giving away money, because I'm always waiting for either monetary amount or a level to be hit, and I'm out before that. And yet the trade could go on infinitely, another 10, 20, 30, 100 pips, doesn't matter. I've done my job. I've banked my money. I'm a trader. I'm a scalper. I'm in and I'm out. If I still think the trade's good, I can go again. But the most criminal thing the average retail trader does is leave money on the table. It's criminal, mate.
Yeah, I've heard that from someone else, and yeah, that seems to be the big thing, right? The big thing is like, whereas, a lot of guys are posting on whatever, Instagram or Telegram, and going, look, I've got this, 1 to 10 hour trade. Yet all the other ones that they get stopped out on or whatever, or don't go to 1 to 10 hour, it looks great, but 1 to 10 hour doesn't pay the bills.
It doesn't, no.
Yeah, so on that, you mentioned 1K lot, right? So you put 1,000 lots on. How on earth do you put 1,000 lots on? Is it one order, or do you segment that, or how does that look?
Yeah, I mean, it's always averaging. So, I mean, I'm a realist, a pessimist, some might say. I'm expecting that first trade I put on to be, wrong. I almost I want the pain. I want, because that's really what you're always doing, is the more pain you take, the more you're going to get out, because I know I'm mentally stronger, I've got a good account and this kind of stuff. So I'm looking for the market to say, right, yeah, everyone's looked at everything, all their technical analysis, this piece of information, this news, so I'm going to buy the DAX. That's the perfect trade, isn't it? And it's just like, yes, so we all do it. And it goes immediately against us. I'm like, good. Right, let's get the weak people out. Come on, I want more of this. I want more pain. So, I mean, you can only clip, 100 lots a time. So I generally start out at clips of 40, go to 80, and then I'll just do double clips, and I'll just keep pressing. So it's like, as it goes to levels of interest, and, I want to get the biggest size on the extreme of the market. So when that pulls back, net, you start to get in profit quicker. I mean, don't get me wrong, it's a balls-out way of trading. If you get it wrong, you get hurt. But that's what I do. I don't teach people how to trade like me. I teach people to trade how they need to trade. And if you want to kind of take the way I trade on, that's absolutely fine. But you have to be aware of the consequences. When you're trading that kind of size, if you don't get the pullback, or you don't get that kind of direction semi-right, you're going to take a big loss. And I have absolutely taken some monster hits. But as I say, on an average, year to year, I've never lost in a year.
And so okay, that's pretty cool. And in terms of like what you were doing for the institutions when you were doing it, or this personal trader this personal investor that you were trading for, was this the kind of thing you were doing, or is this like, hey man, this is my own style, I'm just going to do what I want now, or did you have to adjust?
I mean, you were free to do whatever you wanted. I mean, nobody cares, as long as you make money, nobody asks any questions. It's when, you lose money, people start to question it. So, I mean, as I said, when I first started, it was just a scalp, really. I didn't even average back then. I was just looking to get on the moves, get in, out, and bank the money. Very, very simple, kind of order flow, kind of style of trader. And it's only, as you grow up and, you learn a bit more that, you kind of, how you want to trade changes. As I say, I have to make a lot of money when I trade, because otherwise, why am I sat there? I just won't trade. I'll just go and do something else. I will never be a slave to the market. I will never be sat there in front of my screens for 10 hours a day. If I miss something, I miss something. You know what? Big deal. More to life. So when I'm in and I see something, that's it. All my focus, all my attention, my account is there to make me money. So I use as much of that account as I can on that trade, make that money, and I'm out and I'm done. If I'm sat there in an hour, I generally know I'm fighting the markets and I'm wrong and I'm going to lose money. And if it's reasonable, I'll just get out. I'll just take the hit. I have no problem, taking a 5, 10, 20 grand hit and just pressing the button, walking away. Because what am I going to fight it for? You can always get worse. At the end of the day, you've got to have an amount of money that you're willing to walk away from at any point, because that's just trading. You have to be able to walk away from it. If you don't, you're going to end up, coming back to your screen every hour, and it's like 20 grand can be 40 grand, can be 100 grand, can be 200 grand. I have done it. I don't do that anymore. Okay, I need to sleep at night. So I'm either in, I'm right, I'm making money, or I'm wrong and I'm out. That's how we do it.
And how do you have like sort of a fixed amount of your account, like in a percentage based level that you go, right, if I hit that, I've obviously got this wrong and I'm gone.
I mean,
what would you say as an acceptable percentage for people to be putting at risk?
Great question. It's not 1 or 2% of your account like all the experts tell you, because that's just death by 1,000 cuts. You'll never make any money. I think reasonably 10% is where you should be at as a retail trader. Listen, I'm happy to go in 20, 30, 40. When I'm in. I'm playing with open risk, you see. I'm not going, I never use stops. So it's never like, I will try and make this and try and risk that. That's one-dimensional. You put stops in the market, 9 times out of 10, you're going to get hit. We've all heard of, setup, stop grabbers, and all that kind of stuff. The market is designed to take that. So I tell me when I'm wrong. I have to have that mental strength. And don't get me wrong, it can be living right on the edge of risk and what people think is acceptable. But that's where the magic happens, mate. That's where it is. It's living on that open risk. You could be 20 grand offside, and in 2 minutes, you're back to flat. It's like, all the little retail traders are scared out the positions, and I'm sat there 1,000 lots going, here we go, boys. All right, fine, go on. Off you go. But then, as I say, not greedy, not trying to get the entire move. It's always knowing what your account is, having a rough idea of the percentage that you're risking, what you want to make. And, this is the difference, as I keep saying to you, when you've got that kind of size on, you see that big money flash up quickly, and it's like, you take it, you grab it, and you bank it. If you're just on small size and you see in your account flick between $10, $15 onside, $10, $15 offside, you don't care. What's $10, $15 to you? If that's 15,000, wow, all of a sudden that's like, I can do something with that. That's good money. I'm going to take it. And this is the problem I have with people, that they want to start with a small account, like the magic number seems to be £5,000, and then they'll lose that because that's money they can afford to lose, and then they'll do it 5 times. So I always say, well, why don't you put 25 grand in the account? And because that's money you don't want to lose, isn't it? And it's like, oh yeah, Steve, yeah, because you've just lost £5,000 each time, because you're trying to do the same with £5,000 as you are with £25,000 and expecting a different result. It's like, that'd save me some money. That I wish I should have talked to you earlier. It's like,
and I suspect this like an issue of, like, if you start with a smaller account and you're going, well, I've got £8,000 on the table, I'm going to take that off because I can do something with that. Whereas smaller account traders are going, well, I've got like $80 on the table, I can't do anything with that. It's not going to, a night out maybe. So why would I take that off the table? Like, I mean, it's not going to pay my mortgage, So it does make a lot of sense. Now, I mean, talking about putting 1,000 lots on and obviously working for big institutions, there must be some differences you've seen between the retail guys that have come on board and you've mentored and what the institutions are doing. I mean, can you give us some insight into the different mindset and the different, I suppose, way of operating on the market?
Yeah, I mean, it's a time thing again. You big hedge funds, institutions, they can wait you out for an hour, they can wait you out for a day, they can wait you out for a week. your average retail trader, as I say, you're generally working to 1 or 2% risk. So they know that. So they push a market for no reason, then, you're going to get the majority of people stopped out. It's just a different game. I mean, for me, what I teach people to do, is use the institutional money. It's great. When you get those spikes in gold that we saw last night, that's a prime opportunity to sell because people are going to be locking in profit and that kind of stuff. But if you're the wrong side of it, gold's a monster product to trade. I mean, even I'm probably maxing out at 300-400 lots, but that gets your attention, but that's the kind of trades I love because the quicker it goes, the more retail are out. You can pile in that big size. As long as you keep going and hold your nerve, generally, that move will pull back. And again, you're not looking forever a full back. If you're looking maybe, the 50% fib. But as I say, if you average in, that kind of bigger size at the key levels, that, the banks also, want to lock in some profit too. So, they will get that, that quick trade out, the market move, and then might continue. But then, as I say, that isn't any of my concern ever. You're just looking for something I only trade 8 things. So you're looking for something to be out of whack, something to be doing its own thing. And generally, if it's doing that and it's not correlating directly with everything else, then that it's an institutional squeeze. So that's another trigger for me. It's like institutions are in. Great. Expect the move to go 2 or 3 times more than it would do normally. Expect the retail traders to get stopped out. They're going to take some profit, but not all of it. So don't be greedy. Get the profit when it's offered. And that's how you trade that. Perfect example. Gold spikes up. The dollar's at the highs. They're inversely correlated. Yeah, dollar goes up. Gold should go down because it gets more expensive. And it didn't. So that to me is just screaming institutional push up. Bang, sell high, keep selling, keep your nerve, get your money out. Because, yeah, it might go another 20, 30 bucks higher later in the day, but you will get that pullback.
And what about, like, say, just thinking about scaling into the position if it's going against you and all that sort of stuff? I mean, how often would you say that you would get in with your first position and the market will go in the direction and you're out with 40 lots in this case? And you're like, well, okay, well, it's already gone. I'm not going to be able to scale in and get all my other 960 lots on. How do you do that? How does that work, and how often does that happen?
It happens, mate. Yeah, that's just part of trading. That's called a good trade, apparently, when it just does exactly what you think. But yeah, I mean, what can you do? It's this is where you start with at least 40 lots. You've got something, so yeah, it's not starting off with 1 lot again. So yeah, I mean, it's if it doesn't happen, it doesn't happen, mate. You've got to just take the rough with the smooth. It's
and is there something for you like that? You go, oh, that's. Are you upset or or not upset, but are you sort of like a bit gutted or? Versus it going against you and giving you that sort of negative drawdown and then going, I'm going to go again until I get my 1,000 on. Is that something you're sort of going, oh, it's been a crap day in the markets, or?
I'm just too long in the tooth. I don't have any emotion in the markets at all, ever. You expect to take pain. That's part of your job. And if you don't get pain, it's just a bonus. You don't make as much money necessarily, but hey, that's just it. I am zen. I am emotionless in the markets. I don't care. Whatever it does, it does. Whatever I miss, I miss. I don't sit here, like when I first started trading, in a horrible, but, you can't control it, but looking for big global events to happen that shake up the markets. Don't want them anymore. Don't want anything. Just want to be able to trade how I trade. If I see something, I hit it, and I hit it hard if I can. And if I don't, I will just walk away. I'm not, as I say, I'm not tied to the screens. I have a good setup. I have a good routine of when I check the markets. Always have the phone. If I see something, I check my 8 things. I'm like, yeah, I'll see that. I'll go and sit at the screen. If I'm ready, I think something's happening, give it everything I've got, and then I'm out. And that's how I do it. So maybe I check the charts every half an hour throughout the day. And, if I'm going to do a long session at night, I'll check them. But I never sit in front of the screens all the time because that gives you, there's too many opportunities then just to kind of, when you have got a big account, too many opportunities to trade. So you have to see something has to trigger, be it a technical or read some piece of news. And I'm thinking, yeah, something might happen in that. And then I'm looking at everything, my 8 correlated charts. And then I'm going to hit something. If I sit there all day and look at the charts, there'll be a boredom trade. And I don't have that same aggression necessarily where I think, yeah, this is the trade. I'm having it. 1,000 lots, thank you. And that's when I know that I'm just playing at it, when I'm just clipping like 10, 15 lots and watching things. It's like, just not worth your time. Go and do anything else.
Yeah. And I mean, so just thinking about what you said earlier on, like, not trading with a stop loss. Now, I've had a few guys on the show that don't trade with stop losses.
Yep.
And ironically, these are the ones that tend to take the most amount of money out of the market, funnily enough, on a regular basis, like every single month. Now, first couple of things, the guys that come through your mentorship and your training, do you advise them to use a stop loss to start off with? And number two is, actually, I don't know if there's a number two. That's the main one I want to sort of work out. And what I suppose, what do you say to people that like sort of go, oh, hang on a sec, that's not the right way to trade?
I mean, listen, there's no right or wrong way to trading. This is the beauty of it. We all see the markets how we see them, and we all have the right to trade however we want. I mean, it generally comes down to the risk appetite and the kind of trader they are, and that's my job to kind of figure people out. And I say, listen, if you want to, have a set amount of risk, then absolutely use a stop. No problem at all. It's good. But I think, a lot of people, trade with stops because they don't want to spend time in front of the screens. They want to kind of come back and it's either stopped out or they've made lots of money or, well, not lots of money necessarily, lots of movement. Whereas I'm saying your job is to analyze that trade because, for me, it's like, the market will make you want to get out of positions. And if you've got to stop, you don't have a choice. The market gets you out. So how many times did you hear, on the different interviews you've done, I got stopped out for a pip. Always get stopped out for a pip. It's just like, that's because you got to stop it. And the market knows everything. So it obviously knows where your stop is. That's its job. So I don't have a stop in, so it doesn't know where my stop is because it doesn't exist. So it's how much information do you want to give the market? How much of that edge do you want to give away? And have you got the mental discipline to get out, as I said before, with an amount of money or a percentage or just knowing that you're wrong, just be able to press that button and get out. So some traders can do it, some traders can't. So you use the tools we have. So I don't say to people that you can't use stops. You absolutely can. If that's what you want to do, then absolutely fine. I'm just saying personally, I don't.
And this question is purely personal in terms of I want to find out myself. So what do you do from, we're in New Zealand, which isn't it's completely the opposite from the rest of the world in terms of time zones and stuff. You trade the DAX. I mean, when do you trade to get a good move with DAX or whatever other instrument, gold, etc.?
I mean, from our perspective, it's really kind of, 7 o'clock at night onwards. So it works out quite well, really. That's bath time, bedtime for my daughter. And then, I've got, a few hours to sit down with the wife, have some tea, you can check the charts. And if I want to go into the office, go into the office. So you've really got, I mean, even if, you're not a particular night owl, you've still got 4 or 5 hours really to trade. And, there will be something happening in those 8 markets. And if there's not, then again, it's just, you reset, go back to another day. But you do miss moves. Don't get me wrong. You miss like the US Opens, and unless you want to stay up for the non-farm payrolls, etc. But I'm less interested in that. I'm less interested in non-farm payrolls. I haven't traded it really personally for years now. I just don't see the point. It's just a punt. It doesn't mean anything anymore. It's irrelevant. So I mean, because I'm only looking for certain setups and types of movement and generally speed of movement. I still I look how a candle's made, how it's formed. So when you see it's not even like any kind of technical analysis. I know all the names like everybody else does and all that kind of stuff. And it's like I'm looking for a particular type of movement and a particular formation of candles, and that's what excites me. That's what I know I can make some money from, and then I wrap everything else around it, like the Fibonacci, and try and convince myself that this is happening because of this, and yes, well that's happening because of that. It's like no, that kind of movement I've seen before. I know if I stick a load of sides in, I do my kind of the right kind of averaging, and I'm aggressive and put my sides in the right way, I generally make money from that kind of move, and that's just what I do. I'm not doing anything else. I'm not trying to understand what the Fed are doing. I'm not trying to understand, what Elon Musk wants the world to do. I'm just looking for a certain type of movement and speed of movement. And I know with my strategy that generally 80% of the time I can make some money, or at least be able to get out and not take a monster hit.
And you mentioned they're aggressive. Like in terms of being an aggressive trader, I mean, do you think it's important to be aggressive from an emotional standpoint, but obviously not cocky?
I mean, I'm talking aggressive as in, I'll put multiple positions on in very, rapid succession. I'm not sat here beating my screen up and, running around like a lunatic. As I said, I'm pretty zen these days. I don't have that much emotion. I don't care. I just don't care enough. It's either lose money or make money, whatever. I've got enough. I'm fine. So, the aggression is not really it's so tough, you see, because back on the floor, the aggression, like when everyone's, shouting and, kind of the open outcry pits, aggression was good. But these days, aggression is bad. It's your enemy. It's always the guys, that there's one particular guy called Sam that I met, and he was on the course, and I was like, yeah, you're a cool guy, I was like, yeah, man, international school, and my flip-flops, and we met a few years later, and I think he'd made about 10 million quid. And I was thinking to myself, this guy's never going to make it. He's not got the aggression, the ambition like me, and he absolutely smashed it. And it's like, oh yeah, I need to take a leaf out of his book then. And that's really when I stopped, being on the trading floors, because they're quite, listen, mate, I'm up for anything. I've done the Wolf of Wall Street stuff. I've done it. I've literally all that stuff. I've done it, and that's what these traders are: young, rich, lunatics. And I was like, yeah, it was good fun, but I wasn't making the money I wanted. It wasn't giving me back what I wanted, and that's when I kind of turned it all its head. I cut all the costs down. I started trading, doing my own charting software, and just, kind of making money the way I wanted to do in my surroundings. And that's really what propelled me on to success, was just being on my own, being away from all that kind of, glory and madness.
And so jumping back into a chart, I mean, when you jump on the charts, what time frames are you analysing?
Always look at the hourly. So I'm always looking at the hourly charts. That gives me the best overall picture of what I think is going to happen for the day. And then generally when I'm actually trading, because all my charts are set up, I just flick onto a different profile and I have the hourly 15-minute, 5-minute. So I can, kind of see how that move's being made up. And that's really kind of what helps me, because again, being a scalper, little basic things like counting green candles when they close in the 5 minutes, when they're going your way, will give you the confidence to stay in till there's a red candle close. These little tiny tricks and tips that I've kind of picked up over 20 years, they're all visual clues. Because, when you're in the moment and you've got that big size on, you're just sat there, bang, hand on mouse. I've got a big red close all button. So it all gets out at the same time. Yeah. And it's just kind of like, I'm ready. I'm like, I'm waiting for that. When do I get out? When's the market going to take my money from me? I'm, almost like you're paranoid. It's like, what's enough? And that's all I'm cycling through, looking, confirmation, still going. Right, bang, out. Because if you wait, that market can pull back, and all of a sudden you're 20 grand on side, you only take 10 grand out of a trade. You give 50% away because you're too slow. So it's getting out before the market has an opportunity to that taking the profit the first time it's offered. That's where the magic happens in trading, because you can always go again. But if you don't, because like you've been 20 grand on side, then the market just goes, no, I'll take all that. And you're like, right, well, I want that 20 grand back. Markets don't work that way. There's no second chances. There's no mulligans. There's no gimmies. So then you've got to wait, and then it's a different trade, and then you know what it could be, but you've lost it. And it's like, I've got to stay. And then you try to justify it's a different trade. Well, is that trade still good? And I'm offside now. I was 20 grand on side, now I'm losing 10. It's like, I really can't lose 10. And it's like, that's what people start to flap. And people start to kind of, really kind of, panic sex into the trading. Whereas I've got clear ideas of when it is enough. And it's not just the money or the percentage or the round numbers. Again, it's looking for that style of movement and how the candles, forming. It's quite a personal thing. It's very visual, but it's backed up with just a lot of trading time, a lot of effort and time went into kind of perfecting how I interact with the markets. And that's what why I'm a better trader than some people. It's because I understand me. I understand how the markets make me feel. So I don't have to be the smartest. I don't have to be the best at technical analysis. I understand me. Okay. And that's what I try and, kind of really help traders with. Because until you understand yourself, you're never going to have a chance of consistently beating the markets, because there's just too much competition in that.
And are you able to find a trade every single day?
You can always find a trade, don't get me wrong. It's everyone that's traded knows that it's addictive. And, if you've got size to throw around, it's a good feeling when you win. And, it's not great when you lose, but it's part of the job. But you can always find a trade. But yeah, for me, again, quite disciplined these days. So I would generally have in my kind of mind's eye an idea of, again, selling gold. Well, the basic mantra is, I'm looking at my charts right now, is to buy dips in the DAX. Short-term dips, because, well, it's a 10-year trend. Okay, gold, I sell any kind of, out of the ordinary spike, because I don't really think it's a good, use of, kind of hedging, in this ultra, kind of quantitative easing, world we're in. But that's just my personal opinion. So I'll just sell gold high. And then that's it. Euro, dollar, selling high because they're going to have zero rates forever. Buy dips in the dollar yen because it's the world's currency, and they're going to have to put rates up because inflation. And the pound really is just on the hangover from Brexit and COVID and everything else. It's still a cheap currency. It's still, it's been battered which way from the other. But, I think it's just a good dip buying opportunity. But then again, if you try and buy the dips at the minute, we're at the bottom of the range. But so again, it's not just having that idea and then trading something because that's your idea. It's how that move is formed. So again, I'm looking for that speed. So I love fast, spikes up in gold. And I'm like, yeah, quick, in, and get as much size as you can when it's, the greenest it can. And then it's going to pull back. So I'm out even before that next red 15-minute candle might print. I'm out. And this is the difference. What people don't understand with scalping is it's that time. You're in, you're out. You're planning to get out. Before you even think about the reasons why you're in. And it only really works with big size because unless you've got that big size on, like you see, it might cost me in spreads like a couple of thousand to put a trade on. So you're always down. And then if you get it wrong a little bit more pain. It's like offside, and it's like all of a sudden bang, and it's round to that zero. And it's like, well, here we go. How much money? And that first time, it's like, bang, bang, bang. It's like, right, out. And that's it. You've taken your pain. You've just done it all very quickly. You've done a normal trade, what normal people would do. You've just done it very, very quickly. And that's the absolute definition of a scalp. You're in and you're out. And this is what I'm saying. People don't do that because you'd have to do it on a small account with small amounts of money, multiple times a day to make it pay. I don't. I've kind of combined everything into one little package. And that's what I do. And that's how I trade. It's not how I teach people necessarily to trade, but that's how I personally trade.
I suppose that's why a lot of people that are in a trade and they're the opposite guy, they're the retail trader going, why is it pulling back here? What's going on? And it's because the likes of you are taking their 1,000 lots off the table and the whole market's going, no, we're out of here. We're going to pull back and possibly go back and take stops out and then move on. I mean, do you use stops at all? Like, do you even trail a stop? You just close all and bang, you're done.
Done, mate. This is the control thing. I'm a control freak as well. So I have to control everything. So I want to press that button and I want to get that money out for the money I think. And, sometimes, it might take, a minute to close, when you've got multiple positions on. And sometimes that works in your favor. Sometimes it works against you. But what can you do? It's all just part of the game. It's with big size comes big rewards and, big risk, I guess. But it's... I have to be in control of everything. So I have to be in control of how much size I put on, what I'm in the trade for, and then getting out has to be my decision. So I don't want, like I said, because you might be aiming for this level, and then, it might just be one pip away, and you're like, right, okay, well, it's just going to get to here, and let's see what happens. And then bang, it comes down, because as you say, people taking their money off the table, taking the other side even, and then you've given away, a large chunk of your profit. So for me, it's kind of I'm anticipating where it's going to get to and getting out before it gets to that point. So again, it's a lot of, just transfixed. I mean, when I'm in the trade and I've stopped averaging and I know I'm in it, I'm looking at the P&L because that's what's real, you see. Because that's what other people don't understand is, when you're trading on any platform, you're not seeing the real market. So they might be doing this here, but your P&L might not be moving. It's like, because not everything is as it seems all over the world. So what I'm looking at is my money in my account that I can get out at a specific point in time. And that's all I look at. I just focus purely on watching the numbers going up and down. You even see patterns. Don't want to sound too Rain Man here, but you even see patterns in how your P&L moves. Because when you have big size, it actually moves in different increments. And when you see that pattern of it moving and going on side, I'm like, right, well, I don't need to see what the chart's doing, but I know another 2 more increments of that amount. That's probably a good time to get out. So I'm watching, take that money. And I'm taking the money that I see, not looking at the chart.
Yeah. That's really interesting, because I don't know how many traders I've had on the show that have said, don't look at your P&L. So quite different. And so on the opposite side of the coin, how many trades would you take in a session, an evening session?
I mean, it varies, when you're scalping like this, that nonsense, getting in the zone, that just means you're making money. But making money, I'm happy to, maybe go for some, less kind of, good setup trades, because I like playing with profit. And, there's nothing better than, kind of getting a couple of trades on the bounce and then, going back in and going even bigger size. So, I mean, listen, I can do 20 trades in a session. I can do 1 trade in a session. I can not trade for weeks on end. It really just depends what's happening, what mood I'm in. I'm always there to make money. So there's money there to be had. I can be strapped in for a couple of hours. That's fine. I'm not lazy. It's just that there has to be a certain setup. And for me, 90% of my money is made, in a couple of sessions. And when I'm at it, I'm trading well. I've got the size on, and sometimes, I let my rules slide a little bit. In my world, I make the rules. I can do whatever I like. I don't have to justify anything to anyone. So it's like, if I see that 10 grand on side, I think I've got more to squeeze out of that. I'll let it run a little bit, and then maybe it comes back, and then it goes. That's a 20 grand trade. It's like, yeah, well, I'm Steve Ruffley. I can do whatever I want. You know what I mean? It's like, this is it. This is what power you have as a trader when you have that kind of, confidence and control over what you do. It's your rules. It's your game. I'm not dictated to by the market anymore. I can take it, be all in, or I can be, I can leave it and be all out.
Now, I'm going to ask one more question, and because, guys, listening to the show, if you have questions for Steve that you want to ask, what we're going to do is get him on in the future and answer a whole bunch of questions and release those on the channel, so you guys will be able to actually come on and see your question answered. So we'll work out a way to do that, but probably leave a comment in the YouTube or on Trading Nut somewhere. Now, last question of the show before we sort of do a little bit of a wrap-up. Thinking about a mindset, trader's mindset, do you have any sort of like tips or stuff that you share with the clients that you're mentoring and say, hey, look, to try and get your mindset right, here's what I suggest you do?
Yeah, I mean, as I've explained really throughout the interview, it is all mental. I mean, all you're doing is clicking a button. That's it. There's no physical kind of advantage to being a big tough guy in the markets. And it's really, understanding what you want to get out of trading. Okay, what I want to get out of trading might not necessarily be what other people do. And people might say, I'm sure the comments will be, I'm arrogant or I take too much risk or whatever. Don't care. Not interested. I don't care what people think about me. And that's how I've become the trader I am. I don't care what the market thinks about me. I don't look at what other people do. I don't necessarily trust what anybody else says, because why would I? I don't just ring up Warren Buffett and go, oh, mate, what stocks are you buying? Oh, Steve, yeah, I'm going to buy these. Yeah, so get on them. It's like, the world doesn't work that way. Everybody's out to get you. And I'm not like some conspiracy theorist where, I've got my tinfoil hat on. I'm just like, every bit of news you read or everything out there seems to be this way, to make you think something for someone else's gain. So it's like, I'm just pure bullshit filter. Don't agree with that. That's interesting. No, it's not that I know more than everybody else. Listen, I've written a book. I've written for the Financial Times, Bloomberg. I'm a pretty smart guy. But it's like, I only know that the way to make money for me is controlling my emotion and getting, my process in the market. And that's getting size in. That's knowing when to get out. And it's knowing when, you've had a good session and walk away, not trying to get too much out of it. So always what I'm saying to people is like, what do you want to get out of it? Because, people come to me and it's like, yeah, I've got a great mindset. And, listen, I've got stories, mate. I've got stories. I had this one woman who used to call herself a different name when she was trading the markets because she put on a different persona. She was a surgeon by day, and then by night she was Susan or something, the trader. And that's how she got herself in the mindset. Listen, mate, I've had everything. I've had everything thrown at me, and I've met every character that there is to know in trading. And really, again, what it boils down to for me to help people is to say, so almost like going to the doctor. It's like, oh, so what's wrong with you? And they say this. It's like, no, come on. What's really wrong? What are you really thinking? And I've got to get inside their head because everyone wants to tell me, oh, yes, I'm very, very good at risk, Steve. Yeah, and I only want to lose £1,000. And it's like, speak to them the next day. It's like, so how's that risk going? Yeah, I lost £10,000. It's like, how? Well, I didn't stick to my risk. It's like, okay, well, you said that was one point you were good at. Yeah, I was. And then it did something I didn't like. And then it went against me and I just kept going. It's like, yeah, okay, well, something we can work on, a bit of honesty. At the end of the day, I've made every mistake. I've tried everything, in the trading kind of, rule books to try to throw out and whatever. And I've just found what works for me. And that, again, is just certain small setups, putting that kind of Fibonacci around it and knowing me and knowing that my only aim is to make money out of that trade. And just repeating it. That's what I do. I just repeat the same thing. So trading for me isn't, there's still a bit of a buzz there, but it's still, it's still a job. I sit there. And I want to get paid for my time. I just want to get paid more than most people. That's it.
Cool. Well, look, we're going to jump into a very short quickfire round, just to wrap the show up, and then we'll find out how to get hold of Steve and let you guys know that where you can go and post those questions. Now, so how long did it take you to go from newbie to consistently profitable?
I would say a year. But then that comes back to that whole idea of learning the business of trading. I made a lot of money very quickly, but then, spent a good amount of time giving it back because I got addicted to the big win. And that's all I could do. So that's something I had to train myself out. So yeah, about a year to be consistently profitable. And then I'd say to make the kind of money that I was interested in probably took another year. So this again is the difference. You see, it's a journey. You don't just get rich trading. People think you do, but you don't really. If you want to be consistently rich and consistently make that money, it does take a little bit of time.
What's your recommended trading book or resource?
I mean, obviously, The Rough Guide to Trading is probably the best book ever written on trading. But
what's it about? What's this? Can you give us like a 2-second summary or 2-minute summary?
I mean, it's. I was approached by Harriman House, which are a very famous UK independent publisher, and they just said, "Do you want to write?" Like I was doing a lot of webinars at the time, and I said, "Yeah, I can write a book." So it's basically my 80-20 rule of trading, that the markets move 80% of the time with technical analysis, and then 20% of the time with fundamental analysis. Then it's really about my love affair with Fibonacci and how I can pretty much understand any market movement with Fibonacci. And, it's just such a great, simple tool if you know how to kind of draw it onto to your charts. So, yeah, I mean, it's just about that. It's not really kind of any anecdotal stuff about my wild younger days and anything. It's just a very good book about how you get started, the kind of strategies you should look at, risk management, which is something that people just don't pay any attention to, even if it's just like I will stop at this amount of money, I'll stop that. People, if you don't have some framework, then you're going to end up in trouble with these markets. You're just going to end up offside in something that you can't get back from, and that's what kills traders. They'll make the money, they'll think they've cracked it, and then they'll just have one trade, just let it go way offside. They'll lose 50% of the account. That's it. You've lost all your momentum, you lost all your confidence, and you're doomed. It's just that 50% is just gone. It's going the rest of the account. So yeah, it's just a good all round book about just basically my views on how you approach trading in the markets.
Cool. Well, we'll put a link to that in the show notes.
Thanks.
Last question here. Well, actually, two more. What's your preferred broker and trading platform? I think you've mentioned.
Yeah, I'm MT4. I'm old school. Not even interested in trying to learn MT5. I'm an old dog, and I think for the simplicity and the way it's set up, it just works perfectly for me. I trade through Black Bull because they're a good set of guys. I have a lot of money there. So, trust for me is always a big thing. And, being in New Zealand and then being in Auckland, they're only a couple of hours away. So that's good. That gives me the reassurance. And I've also got a good team around me there. This is the whole thing when you're at my level and, you come to my mentoring, you don't just get customer service, you get your own account manager, you get access to me. And if I don't like it, I can speak to the owner directly. So this is when you move in the big boy world, you get the big boy perks. So that's been nice. And they throw a good party as well. We had a few good nights out with the lads. That's always nice as well.
Cool. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100k. You can learn more at hankotrade.com or just click the link I've put in the description. Now, if you could leave our listeners with one piece of advice, what would it be?
Wow. And that's like the bombshell question, isn't it?
Exactly.
It's understand yourself. Really be honest with yourself, hold yourself up to a mirror and say, what do I really want out of trading? What do I really think I can do? And then put a framework around that. And if you're struggling doing that, yeah, sure, speak to someone like me. But you've got to go into these markets with a plan. It doesn't have to be War and Peace. It can be a basic plan. But if you don't have a plan, you will never succeed in trading. You'll never get to that consistency in trading. That's so, so important.
Awesome. Well, look, before we wrap up, what's the best way for the guys to get hold of you?
I mean, just Google Steve Ruffley. There's plenty on Google. You can speak to me directly on Skype. Everything's just my name. So it's steve@steveruffley.com. It's Steve Ruffley on Skype. If you tap Steve Ruffley into Google, I must have about 25 pages. So if you can't get hold of me somehow, you're not trying hard enough.
Cool. Awesome. Well, look, guys, do remember, put your questions in the comments on anything, or DM me your questions, or put them in the, just email them to me, whatever it is. We're going to do a little series where Steve's going to answer your questions, and I haven't gone through all the regular questions I ask here, so we've had a great 54 minutes of Steve answering and telling us what he does and how he trades, so it's been fantastic. But to find everything, guys, head over to tradingnut.com, search for Steve in the search box there, and you'll find links to his book and in the show notes as well. And look, until next time, I wish all my listeners trading happiness and success. All right, folks, so there we have it. Now, do remember, we did shoot a video after this where Steve actually breaks down his what he does on a chart. He talks about how he gets in and out of trades. You're going to see that on a price chart, so it's a real sort of treat for you guys there. And also, it's his live account as well, so we actually talk about a bit of transparency around the live account there. So you've got to check that out, guys. You're going to get to see his actual trades on that live account, so real treat. Jump over there onto the YouTube channel to check that out. Last but not least, we got the Genius Trader. Just a reminder, that is coming out, so stay tuned for that. The December bot is coming out. I don't know what the name is. I think it's called the Happy Single EA or Happy Single Bot. So that's coming out in the Robot Builders Club this December, so stay tuned for that video as well. And we'll see you over there on YouTube. All right, guys, thanks for listening.